And then I'm going to share some recent facts and figures. First on the language. So we take crisis financing to mean funding and financing used to prevent, prepare for, and respond to crises. So where the term risk comes in and makes this crisis risk financing is where the finance targets a specific crisis risk and is arranged before a potential shock. So crisis financing in 2021 was $71 billion of international finance. Crisis risk financing is smaller than that. Now, onto some facts and figures. It can be quite challenging to track finance for prevention and preparedness and disaggregate those in the way, particularly the way that aid data is tracked. So the cleanest statistics often come from tracking pre-arranged finance, that is finance to support crisis response that's arranged in advance of the crisis unfolding. So in a recent study by the Centre for Disaster Protection, we found that pre-arranged finance is growing, but it accounts over the period 2017 to 2021, it accounted for just 2.2% of all crisis finance. So pre-arranged finance was just 2.2% of all crisis financing. The good news is that it is increasing rapidly, and much of this increase has come from contingent loans, including those provided by the World Bank. So the World Bank's CAT DDO has dispersed more than $4 billion to date of pre-arranged financing. However, if you restrict analysis to the World Bank's list of fragile and conflict-affected situations, that percentage, 2.2%, drops to 0.2%. So 99.8% of crisis financing for fragile and conflict-affected situations is arranged after the fact. As the crisis is unfolding, it's not arranged in advance. So should we care? Is having so little pre-arranged finance a problem? I mean, discretionary ex post funding, including budget reallocation mechanisms and appeals-based humanitarian finance, clearly have a key role. In particular, they're often a very sensible approach for risks where it's challenging to prepare for and plan for in advance, such as risks related to violence and conflict. However, funders retaining discretion over what they will fund in a future crisis can disincentivize prevention and preparedness and can provide limited incentive to understand risks and act before a crisis unfolds. This can be a problem, particularly for crisis risks that are modelable, such as those that are related to climate. What about this 0.2% for fragile and conflict-affected states? So the majority of this is actually not in the context of, does not come from loans. For most of the pre-arranged finance across all of aid, it comes from loans. But if you're just looking at the list of fragile and conflict-affected situations, 85% of the pre-arranged finance actually comes from development insurance provided by African Risk Capacity. And we do have a fourth panelist who will be joining in a moment, but unfortunately, apparently the internet is not very good in Côte d'Ivoire, so he's trying to connect Leslie and Dlogu. So he'll be joining us in a moment. So in our session today, we're going to hear from Fardosa Abdullahi, who's the Senior Policy Coordinator in the Ministry of Labour in Somalia, for her views on international crisis financing, particularly as delivered through social protection systems. If Leslie is able to join, we'll also hear about that 0.2% that's already been programmed in fragile and conflict-affected states. We'll hear from Christina Bennett, who's the CEO of the START Network, both around pre-arranged finance delivered through humanitarian and civil society organizations, as well as for a civil society perspective on pre-arranged finance and crisis risk finance delivered through government systems. And we'll hear from Ekesweyi Ayahen, who's the Secretary General of the Insurance Development Forum, about the role that development insurance can play in supporting fragile and conflict-affected states. And we will have an opportunity for you, our distinguished audience, to ask questions as well at the end. It's a short session, but we'll certainly make time for questions at the end. But first, we're going to turn to Galina Vincelet, who is the Director of Operations Policy at the World Bank, joining us in person today. She oversees the bank's policies on operations and country engagement and supports the management of risks in operations. And importantly, she's spearheaded the development of the new crisis toolkit for the World Bank. So thank you very much for taking the time to join us today. The last year has been pivotal for the World Bank, including the evolution roadmap, new leadership under AJ Banga, and the ambition to make IDA replenishment the largest in history. The bank's also just launched the new crisis preparedness and response toolkit, which has a number of very exciting elements, both in terms of its coherence as well as individual elements being advanced. So can you walk us through the evolution of the bank's approach to crisis financing, and how do you see the crisis toolkit delivering particularly in fragile and conflict-affected situations.
Very good. Thank you very much, Daniel. This works, right? Okay.
Yes, it's all right.
Excellent. Thank you very much, Daniel. Thank you for the kind introduction. I must say that I need to be modest here. I didn't spearhead the crisis response toolkit. Behind the crisis response toolkit is a whole host of absolutely incredible colleagues, and I have actually one of them sitting among us. I'll turn to her for the hard questions to answer, Susanne. But it's really been a very, very exciting effort to find a way how to respond to crisis, not diminishing the value of our traditional response instruments and mechanisms, but how to respond to crisis within days when a crisis hit. And this has been really about recognizing that crisis should not be treated as a surprise. They have become, number one, more frequent, but also number two, more severe. Okay. And from this perspective of frequency and severity is where we actually started to look at how and what in our toolkit to respond to crisis can be enhanced, can be improved, so that we can be there within days when a crisis hit. And the relevance of this topic it has no boundaries. I mean, we were chatting in just a few minutes ago. Really, crises do not distinguish between income levels, between the geographies. Every country is exposed to crisis, but the severity and the way the crisis affect people is different in different parts of the globe, and that's where the importance of how we respond to crisis in fragile and conflict-affected countries is of particular importance, and hence I believe the importance of this topic to be situated within the Fragility Forum. So thank you for making the time for this, and thank you for being here in the audience, but also online. And I'm very pleased to meet my fellow panelists and also to learn from them. So to your question, how do we situate the crisis response in the broader context of the evolution? Indeed, the crisis response is one of the key elements in our playbook. Again, with the intention to respond fast when a crisis hit, but more importantly, to work with countries ex ante, to work with countries on preparedness before a crisis hit. And that part on the preparedness end is extremely important. What we have put in place with response, and I'll go through the various options to countries, but what we have put in place, countries would not be able to use if they have not prepared in advance. So again, the preparedness point is something really, really important element of this toolkit. So we put forward 4 ways and 4 innovations through which we can be there within days when a crisis hit. One has to do with the ability of our client countries to quickly repurpose unused portion of their World Bank portfolio. When I say unused, this is, for many of you, you know, bank portfolios, the bank instruments, that those can be in investment financing or in program for results. And many countries do have the way these instruments work, they do not disburse right away. There is a period of time through which they disburse in order to achieve their development goals. So at any point of time, there is a portfolio which has undisbursed balance of financing, which is already approved by the board of executive directors. So having the ability to take a portion of that financing and actually use it to respond to crisis is the first element of the crisis response toolkit. There are 2 avenues, if you will, this repurposing of funds can occur. One is through, if the country has an active and open CAT DDO, and you, Daniel, mentioned this instrument, that repurposing of funds can be channeled through the budget. This is basically budget support, can go into the budget. The countries can use it for the crisis response right away. The second element the second avenue, if you will, that a country can take to disperse this uncommitted balances is through a crisis emergency response project. This is not a project that the country needs to develop and to bring for approvals and for financing and any of this. This is, if you will, a shell that in the period before a crisis hit, there is a very significant work that is done between the bank and the client in getting ready for crisis. Things that can be financed from the CERP, Crisis Emergency Response Project, are things like medicine, like food, like shelter, like things dense, like things that you know that you will need in these first few days when a crisis hit. The amount that a country could repurpose from its undisbursed and uncommitted portfolio is up to 10%. Right? We've put a limit there so that this is something we'll be redirecting funding from development projects to emergency response. There is a cap to that. Up to 10% of undisbursed balances can go through these two avenues, if you will, in crisis. The other aspect of the toolkit has to do with access to prearranged financing. And here we talk about contingency financing. There is two types of contingency financing. One is through budget support, and those are the capped DDOs that you spoke about. There we have scaled up the size that countries could have in place, so that they have more funding available to them in case a crisis hit. For capped DDOs, it's extremely important that countries have a reform program. Again, the preparedness angle here is key, through which, again, they have put the institutions, the reforms that they are ready for the response. The second instrument that we are adding, actually formalizing, because we did not have in our toolkit, is a contingent IPF or IPF DDO. This is investment financing. With the investment financing or the IPF DDO, you have a very, very well-defined and narrow trigger. It can be, we have used this not in fragile and conflict-affected countries, but we have used this in other countries. For example, the trigger can be a drought, or the trigger can be a bank failure. It's very narrowly defined trigger where the countries know that they have vulnerabilities, but they can in some ways prepare for these vulnerabilities through the contingent financing. So this is again the contingent aspect of the work, that the financing that we are putting forward is very important. One point on the contingent side is the ability to scale up contingent financing. And it's an important point because in many cases when countries make the choice, should we go and borrow or engage through grants for contingent instruments, there is an inherent trade-off between contingent and development financing. And often, and probably that's what part of the explanation of the numbers that you shared with us, of the low uptake, if you will, for contingent financing, is precisely this trade-off. Right? Their current needs, like roads needs to be built, schools need to be built, water supply needs to be ensured, public services need to be there. So this trade-off between current development needs and contingent financing is very stark. The ability which the toolkit provides to scale up contingent financing basically allows the countries to work on preparedness, whether it's through reforms or through investment projects, work on preparedness, but have smaller amounts, if you will, booked on their books, because when a crisis hit, they can scale those up. So to us, this is a big innovation, again, because it minimizes this trade-off between development finance and investment finance. I'll quickly give you two more highlights of the crisis toolkit, and the next one has to do actually with providing insurance and transactions against catastrophes in times where, I mean, those are basically events that are low frequency but very high impact events. So in some ways, what we have done through the toolkit is to embed this option of taking the insurance, a cat insurance, to insure against such events, to pass, if you will, the risk to the market through this purchase of insurance. And we're embedding this in our regular operations, in our financing. This is an innovation. The transactions themselves, whether they're cat bonds or cat insurance, is nothing new. This is something that our Treasury has been offering for a while, but bringing this as part of our financing is new, and it's something that every country can have an opportunity to choose to insure against this low frequency but very high impact events. So when they occur, they don't need to incur debt and to borrow and to struggle for financing. It's there. Last but not least, we of course have the climate resilience debt clauses. This is only for small countries, following the small states definition of the World Bank. While the rest of the instruments that I described, whether it's with respect to rapid response option being put in place, the contingent CAT DDOs, the IPF DDOs, but also the embedded CAT insurance and CAT bonds, those are available to everybody, regardless of whether they're IBRD or IDA countries. The climate resilience debt clause is an important addition, but it really focuses on small states. And there, the proposition is that because of the vulnerability of small states, because their exposure to, in some cases, extreme vulnerabilities and events, the climate resilience debt clause allows a pause of debt repayments for 2 years. This is valid for new loans as well as for existing loans. So this in some ways completes the toolkit. It's in some ways a lot of information, but the idea of the toolkit is that it really puts options on the table. It provides us the flexibility to act and to react, but also really provides the flexibility and the ability to work with countries on preparedness, to have the instruments, to have the placeholders, to build their institutions and their preparedness plans, to help them with reform so that they are ready when the disaster hits. Maybe I stop here. Yeah. I can talk a lot more about this, and I hope we can engage. But why don't I pause here?
Yeah, no, that's great. Thanks. Well, thanks, Galina, very much. So now let's move from a global perspective to a national perspective, and hear about crisis financing and delivery at the country level. So we're very fortunate to have Firdousa Abdullahi on the line, who's, as I mentioned before, Social Protection Policy Coordinator in the Ministry of Labour in Somalia. So thank you, Firdousa, for taking the time to talk to us today. What do you see as the opportunities and challenges of building a national social protection system that's adaptive to crises? And I guess, how do you see the role of international crisis financing? Is it set up well to support the government of Somalia's social protection work? How do you see it?
Thank you so much for having me. I think this is a great opportunity to showcase what Somalia is doing on social protection, especially the adaptive social protection, which is ready to respond to shocks whenever the shocks happen. And if I perhaps start with opportunities in the case of Somalia, I think the opportunity that Somalia had was to start at a time where really social protection was quite new, and we have learned from what other countries have done not so right in the past. So we have started the social protection by building the building blocks of the shock responsive from a system perspective. So one of the great opportunities is to really start with building the technology to respond to shocks much quicker than before. Really, one of the greatest opportunities that Somalia had was to invest in what we called Unified Social Registry. So we have invested in Unified Social Registry, which has been supported by the bank through an IDA finance. The Unified Social Registry has really supported us to ensure that we respond to crises much quicker, and to also ensure that we can expand both horizontally and vertically as shock happens. So the current in the country, we have a national social protection program named Bahnano, which supports over 200,000 households. One of the major challenges that we have had as a country is that, and as soon as we started the program, we have had multiple of shocks that has also affected the country, and the locust infestation, as well as droughts, floods. I'm sure you are aware that Somalia, especially the Horn of Africa, especially Somalia, have not really been short of different disasters happening, unfortunately. And the challenges also, what we've had is having multiple of agencies working in Somalia, having different databases to respond to shocks, which is in a way very good, but also it scatters the small resources that the country allocation has from the humanitarian perspective. And a lot of duplication, or having people being targeted twice or missing others. And the other challenges that we have had in the country is really the lack of national ID system, which has also been an issue of ensuring that we are responding to the right people and not duplicating the efforts. Mobile money and technology use has also been a really big opportunity for Somalia because all the shock response and all the social protection programs are being delivered through mobile payments. So that's the use of technology is really one of the major things that we have been using. Partnership with different agencies and in responding to shocks. We have the humanitarian agency named SODMA that is also working very closely with the shock responsive programs in Somalia, and also the UN partners, INGOs, and different donors as well. So the opportunities of partnership and the technology has really supported Somalia in terms of responding on time with the shock response. But we also have a lot of challenges on the financing part, which really, I think it's a global challenge. Globally, we have a lot of shocks that happens. And most of the bigger issues that we have is really on the financing, on where does the funding come from, when does it come, and when can you respond? Would it be too late to respond while looking for funds or going through the processes of funding? We have received a couple of funding from the bank, from the crisis response window, which really supported both the drought responses, flood, which has recently happened in the country, but also the locust that has happened. The other opportunities really that we have also seen is by building the Unified Social Registry, is we already pre-identify the potential people who might be supported through these shocks. One of the other things that maybe what we need to look at is to identify funding much earlier than we know. We know that the crisis that happened in the country is not normally something that happens overnight. We have tools that tells us about the anticipating what is going to happen. And really anticipatory action, I think, is also quite an important way to ensure that we respond quite quickly. And early warning systems is also something that needs to be utilized in countries, especially in the fragile context, as well as ensuring that, you know, the panel has also spoken about pre-arranged financing as well as insurances. We also have insurances which really support to pre-finance or people who have been affected by the droughts, and such as the livestock insurance, crop insurances, and so on. And in terms of the international funding, I think more needs to be done. Definitely, more needs to be done. A pool funding on or pre-arranged financing for countries in fragile context that we know have cyclical shocks, and anticipating using the technology and early warning systems, I think, is really important. Thank you.
Great, thank you, Firdousa. So there's a lot happening in Somalia to get the money to where it's needed through multiple channels. So now let's move to Ekeswehi Ayen, Secretary General of the Insurance Development Forum. So if you look at the numbers across international crisis financing, as Galina mentioned, the World Bank's contingent loan that provides budget support really has been a workhorse, particularly for middle-income countries, in driving up those levels of pre-arranged finance from what was pretty much zero back in 2017 to up to 2.7% by 2021. But the story is quite different for the list of countries that the bank categorizes as being fragile and conflict-affected situations, where 85% of pre-arranged finance for those countries is provided by development insurers. So Ekeswehi, what do you see as the role of development insurers in fragile and conflict-affected states? What can we expect it to deliver, and what does it need to succeed?
Okay, thank you very much, Daniel, for those questions. I think, the previous speakers touched on a lot of things that I would perhaps just reinforce, and maybe just focusing on three things in terms of where I see the role and contributions that development insurers can make to this space. I think the first being access to finance to respond quickly to disasters. And this was something, that was mentioned earlier. Some of the mechanisms that we've seen emerge in this space have demonstrated that technically it is possible to structure instruments that actually can release funding and time to get to communities. Naturally, obviously, there is a need for further work, refinement, improvement of some of these solutions, but I think that is one basic primary contribution that can be made. The second is, obviously, we've heard a lot about risk layering approach, different types of tools, instruments, etc. Again, going back to the numbers that you mentioned, it's quite stark when you think about 0.2%. So I think that I hope people pause to absorb what that means, right? When we talk about expanding the role of or the availability of instruments and tools that countries can actually have accessible to them in order to finance their response recovery efforts. So I do think that there is a contribution that development insurers can make in terms of diversifying or creating new solutions that can be part of that toolkit, as was mentioned earlier. The third is perhaps some of the core benefits that can come through the structuring of these instruments. Again, basic is through the conversations that often happen through the establishment of these insurance programs are the development, I think, of quite important risk repositories. So risk models, risk profiles that can be quite helpful in terms of bringing understanding to what these risks are, how they evolve over time, the impact on people, the impact on economies, etc. And for me, that's a very basic contribution that, it's the implications in terms of how that can be used to inform better risk management are quite profound. The second area when we think about co-benefits is also just in terms of forcing a more regular conversation around risk, which can hopefully deepen our understanding of how these risks evolve, but also the trade-offs or I shouldn't say, but maybe it's not trade-offs, but the impact when we do not have resources available in terms of our long-term development activities. But I will also add the caveat that part of the challenge within this space is that these things don't happen automatically. Even with the structuring of these kinds of insurance programs, there's still a need for targeted investments in technology, in people, political engagement as well, in terms of the understanding of these mechanisms and how they are relevant and how they can be deployed. So that's what I see in terms of some of the basic contributions that development insurers can sort of make in the context that we are focused on. In terms of what I see as what they can, how they can deliver and help, and how they can deliver on this issue of the 0.2%, I think, again, it's just reinforcing the availability of expanding the tools, ex-ante instruments that countries have available to them. I think there's also an important part of this, which is how do we get, it's not just about the financing, but it's also about targeting. And this is where I think the risk information can also be invaluable. But I think Fardosa referenced this. It's how do we ensure that people who are most affected actually are getting the resources that they need? It's not just simply, okay, yes, the money has arrived in the central treasury or wherever it has arrived, but that those who are affected are receiving support. And I also think that in terms of the potential that they can offer in terms of success or changing some of the challenges that we see in these spaces, I think that they offer a really quite interesting bridge between the short-term needs that emerge within the humanitarian sort of response to these events and the longer-term question of development, right? How do we see risks? How do we manage risks in order to cause a shift within that process? And I think that this is an area that we perhaps have not interrogated enough in terms of the role that development insurers can play. Also because it's not necessarily a short-term contribution, it's a much longer, deeper sort of engagement. In terms of the success of actually allowing these mechanisms to deliver on that mandate, I think that we have to reconcile with the fact that there is a need for premium financing. Again, to the points that were raised earlier. Countries who are struggling to finance roads, education, schools, health, etc., they often see this as quite a burden in terms of paying premiums for insurance. At the same time, we also know that when you do have these events and there is no response to these events, the longer term costs are much more significant. So for me, there is a conversation I think that the community needs to have in terms of the role of premium financing in order to allow us to again, expand the availability of these solutions for those who need it. Again, I will just reference the point around targeting, because I think that is a point that we must continue to reinforce. It's not just about the structuring of the finance and the solution, but ultimately, what is its impact? And that is an important part of the conversation. And then finally, I would just say we need perhaps more innovation and greater partnerships in this space. And I really appreciated, again, the intervention from Fardosa in terms of what we are seeing between public, private, humanitarian actors, the development finance community in this space. But we need a lot more. So those are my interventions, Daniel, I hope. Okay.
Thanks, Ray. And on your penultimate point, so for those of you who had a look at the cartoon, there's some cartoons downstairs in the lobby as you come into the MC building. There's one that was the Red Cross Red Climate Centre did 4 or 5 years ago, which is we have no funding for disasters that haven't happened yet. It's a brilliant cartoon, but we do need to shift that, don't we? I think if we want to sort of support countries. So moving on to Christina Bennett, CEO of the Start Network. Thanks for joining us today, Christina. So we've heard a bit about getting money in at the right time, and we've heard about getting money out to the right people and the systems to get the money out to where it needs to go. We also the organisation African Risk Capacity have an independent evaluation of all their instruments. They're the only big organisation that provides prearranged finance that has an independent evaluation, and it's incredibly interesting reading, finding out how it's going. And one of the things they're really struggling with is connecting that money into money out. So the money is coming in really quickly. The money is actually triggering and coming in within 2 weeks of the shock, but it's still taking more than 8 months in the majority of cases for the money to actually start reaching people. So that sort of connection is really important. So Can you say something about how the Start Network, what is the Start Network learning about connecting that money in to that money out? And how are you working with governments and development actors to try to build that lasting capacity on that sort of, the money in, the money out, but also that connection?
Great. Thanks, Daniel. And good afternoon, everyone. I'm Christina Bennett, the CEO of START Network. And just a quick word about START Network. We're a network of close to 100 local, national, and international civil society organizations, humanitarian organizations working across 6 continents. And for the past 10 years, we've been operating a suite of funds and financial tools, including a rapid response tool, the Global START Fund, national pooled funds, and a risk-based financing instrument called START Ready, which looks a little bit like the crisis finance toolkit in that it mixes and matches different tools, including national contingency funds, a global risk pool that covers 8 hazards across 11 countries, and insurance and soon reinsurance. And as a humanitarian network, most of what we disperse to is to support the poorest and the most vulnerable, and often in fragile and conflict-affected states. And from that experience, I can sort of offer the following insights about operating, getting the money in, but also getting the money out in those fragile situations. So first, when developing crisis risk financing systems within fragile situations, we need to think about impact before instruments. And what do I mean by that? So a great deal of the development that's gone on of crisis risk financing instruments has focused on the delivery of finance, the tools and the instruments, and less on the impact that we want those tools to have and whether or not we can achieve those impacts with the tools that we're building. So, in my mind, effective crisis risk financing sort of needs to be instrument agnostic. Where there are multiple hazards and cascading risks in fragile and conflict-affected states affecting communities in multiple ways and across multiple timeframes, the starting point really does need to be the impact in the communities, the risks that they're facing, and the potential that the instruments could have in protecting those people against disaster and crisis risks. And the potential that the instruments would have if when delivering the right type of assistance in the right places at the right time, and the mix and matching of those instruments that will deliver that right impact. So the second learning that we have from operating these funds is that crisis finance in conflict-affected states and fragile situations needs to be delivered in concert. So really through collaborative models of managing risks together that reflect the respective strengths, whether you're talking about government, multilateral institutions, civil society, private sector, and others. Working in fragile situations is often challenging because governments may be unable, they may be unwilling to offer crisis financing themselves, and often they're dependent on external support for the money and also for the programming in immediate relief and recovery. Our own experience in working in these contexts is that there is often very little in the way of government-led crisis risk financing strategies, limited or underused capacity, limited or underused data and analytics when it comes to modeling risks. And where that capacity and knowledge does exist, it's often really nascent and really fragmented. So where it's possible, and it's not always possible, especially if a government is party to a conflict, it is important to work together so that external actors, non-governmental actors, are working to develop these complementary crisis risk financing systems to support national preparedness plans, national risk management systems, and to Fardosa's point, social protection systems. It is important to do this from a scale and a sustainability, but also an accountability standpoint in terms of that accountability to communities. And then the third sort of aspect that I would emphasize here is that effective crisis risk financing in any state, but especially in fragile and conflict-affected states, is the need to think in terms of systems and not in terms of organizations or instruments or policy agendas. For organizations such as START Network and our members, but also for organizations such as the World Bank, it means not separating out disaster risk financing from resilience, from disaster risk reduction, from early action, humanitarian preparedness and response, into those organizational silos and those policy spheres that we all know so well. It's instead thinking about a pooling of the risks, a layering of the instruments, and a continuum of action using those instruments. And for donors, this means really avoiding funding individual instruments, instead to fund end-to-end crisis situations and crisis solutions and systems, including preparedness systems, science and data development, and upskilling local and national actors to engage in these systems. In order to be able to do that, these donors really need to be adopting much more flexible financing architectures, flexible financing systems to fuel this much more comprehensive approach to crisis financing that we'd like to see. So in terms of START Network and what we've been trying to do in terms of impact before instruments, in terms of really working in collaboration with our partners on the work that we do, I just want to give an example, a recent example from Somalia, which has achieved some really positive results. So in 2023, START Network purchased an insurance policy from the Africa Risk Capacity, and Leslie is here on the line, so we'll hear more from him on that potentially soon. But we purchased this insurance policy against drought in Somalia in 2023. There were predictions of a fifth failed rainfall and potentially more than 8 million people in Somalia facing acute food insecurity. And so we bought this insurance policy. Alongside that, we reserved some money from the Start Ready product against the drought risk. And in March, the triggers were met. The threshold for both the insurance and the Start Ready money was met, and we released $4.2 million to START Network members once those triggers were met to begin working. And so our START Network members, who are civil society organizations, got together and started operating to deliver cash in Somalia based on these pre-agreed contingency plans that had been developed together with the government of Somalia in support of its own disaster risk financing plan. And the results after that intervention were positive. That when the drought occurred, because of the cash assistance, most of the people receiving the cash assistance mentioned that they ate more, they increased the number of meals they ate, the diversity of the food they ate. The cash assistance helped them to buy household goods, it helped them to repay debts. And after the provision of cash, the household hunger scores improved, with people reporting little to no hunger. So maybe just to round this out by saying the success of this program in Somalia was really based on, one, the identification of risks and the potential impacts from the outset. Two, the mixing and matching of the tools that we had at our disposal to cover the range of those risks and to deliver those impacts. And three, the close collaboration among the government of Somalia, the Africa Risk Capacity as an insurance provider, and local and international civil society actors working in concert based on these pre-agreed plans and in support of the government of Somalia priorities. Thanks.
Great, thank you so much, Christina, and welcome, Leslie. So I understand you were connected earlier, but because I couldn't see you, I thought you weren't there. So obviously, if you need to turn your camera off for internet connection, then of course, thank you very much for joining. So I don't know whether you heard the beginning, but we heard from Galina about the World Bank's crisis toolkit, and we talked about the state of the levels of prearranged financing, particularly in fragile and conflict-affected situations. And I mentioned that of all the prearranged finance in fragile and conflict-affected situations, the organisation that you lead, the African Risk Capacity, was responsible for 85% of all that prearranged finance, or $5 in every 6. So the question for you, Leslie, is about how you see partnership opportunities. What as a development insurer, how do you see partnership? What do you need from partnership opportunities, including with development banks as well as others, and obviously in the context of the bank's new crisis toolkit as well?
Good afternoon, everyone. I hope you can hear me quite well. Apologies, I can't be with you in person. And also, I'm going to have to, at some point, turn my camera off because the internet connection isn't great, because I'm actually out in the field. So please bear with me. Just building on what has been said by the earlier panelists, the African Risk Capacity is the largest provider of prearranged financing on the African continent. Our insurance programs cover about 50 million people every single year. And we have paid in the past few years over $200 million in claims, which have gone to helping the people that are most in need. On the partnerships front, I'm happy to see, my friends and collaborators that I work with quite closely, the World Bank, the Center for Disaster Protection, the START Network, IDF, and Somalia, which is one of the countries where we are offering insurance programs. The opportunities for collaboration are, in my mind, threefold. Firstly, starting with risk layering and increasing the number of instruments that are available in the aftermath of a disaster. These could, as was mentioned earlier, could include some element of a savings account, some element of contingent credit, so credit that is disbursed after the occurrence of a disaster, and finally, some element of insurance, which we have become very skilled in providing over the past 10 years. The second aspect is around distribution. One of the reasons why there is low coverage of insurance is that we need, in most cases, an intermediary to help us with the distribution. We've worked with governments, we've worked with social protection, we've worked with civil society and with international NGOs like the START Network. Then the third collaboration is around coordination of the contingency plans. So each of these people that we're working with set up a plan on how they would utilize the funds when there's a claim paid, and there just needs to be much greater coordination so that there's no duplication of effort and some people are not missed. I am quite optimistic that we are heading in the right direction, even though I'll be the first to acknowledge that a lot more needs to be done. So I will stop here. Thank you very much.
Thanks so much, Leslie. So I think I'll ask one question to Fadosa, and then we'll open up to questions from the. And then I'll open up to questions. If you have questions online, please type them in and we'll hear. Otherwise, open up to questions in the audience. But Fadosa, if I may ask, so international funding for crises has historically been slow and unreliable. And certainly, if you look at the 2017 drought in Somalia, finance came quite quickly. 2019, not so much. Do you see this in Somalia? Do you see challenges in terms of speed and reliability of international crisis financing? And if international crisis financing was faster and more reliable, would you be able to do more?
Thank you so much. I think one of the major crises after the crisis happens is really looking for the funds at the right time, and the unreliability of the funding in Somalia is really on the cyclical shocks that always happen. So you have, shocks that happened 2 years ago, humanitarian and the government and the private sector doing fundraising, and then another crisis happens. So I think one of the major issues that we have is the shocks that are very close to each other. We also know that globally there is, a lot of crisis happening. There's food inflation. There's climate change induced shocks. So the shocks are quite many, and the funding is actually shrinking, if I might say. And this is where we need, an innovative way of ensuring that we do get funds at the right time. At the moment, there is World Bank, all the World Bank funded projects in Somalia do have contingency of, I think, 5 to 10%, which is put aside for crisis response. That has been utilized a few times, but I would say that the reliability of the funds is not much right. And I think there's also there's a donor fatigue as well as increase of the crisis happening, and this is maybe one of the reasons that we need to all the different partners who are working to either respond to shocks or work with the vulnerable community to come together and really see a way of ensuring that the small funding that we get from different sources are utilized in the best way possible. I'll stop here for now. Thank you.
Thanks so much, Fadosa. So maybe let's open up to questions from the audience, and if you're not quick enough, then I will come in with more questions. I have plenty of questions myself. Please come up to I think there's a microphone here. If you come up, let's have 3 or 4. Please go ahead. And if you could introduce yourself before.
Sure. Thanks so much for this interesting conversation. I'm Melissa Johns with UNHCR. I cover Latin America and the Caribbean, so different context. But I'm very interested in the CAT DDOs. And my question from the perspective of UNHCR, which is the United Nations Refugee Agency, is the inclusion of non-nationals in these types of response. So particularly, I've looked at the CAT DDO for Costa Rica, and there's a large percentage of Nicaraguans there who have agricultural holdings. And so I'm not sure whether they would be able to recover the losses in a major hurricane, for example, or the Venezuelans in Colombia who might have their housing disrupted because of another major natural disaster. So I'm just curious how the bank has applied the ESF or the other protections for very vulnerable groups in the context of these crisis response vehicles. Thank you.
Great, thank you. Please go ahead.
Thank you very much. Good afternoon. I'm Stanislava. I'm a fellow at Brown University, and I focus on how security actors and civic actors engage in fragile states. My question is regarding the crisis response you talked about in disaster settings. Oftentimes, it's the national military that has the capability to step up and does some of this kind of very extra shock contexts. What are the sorts of thinking, or perhaps you've already thought it through and it's part of your mechanisms, do you have in place to better keep the separation between the development and security piece, which is so important for the bank, but also understand the realities on the ground and make sure that while mechanisms may touch, the legality does not, and considering we have to adapt going forward, are there things that you think we ought to be considering? Thank you.
Hi, my name is Reda. I work with FCI in the Maghreb region, and I work a lot on disaster risk financing, and especially Morocco, as you know, who has had a earthquake last September. While it's not an FCV situation, I think there's a very common question that can arise naturally, which is we're looking at different instruments, CADDO, IPFDDO, and one that arises naturally is for a contingent instrument for the IPFDDO, they have undisbursed balance fees on something where they need to disperse if there's a catastrophe, so on which they have no control. And usually the rationale we give them is this is an incentive to disperse quickly and to be efficient. In the context of the IPFDDO, this is triggered by a catastrophe, not by working on dispersing. How would you give them a rationale for that? Thank you.
Oh, very good question. Right. So I think we've got 3 questions here. I don't know, Galina, if you wanted to answer the question about budget support through or the support to non-nationals through budget support, and then the question. Yeah, great, perfect.
Yes. Excellent questions. So perhaps on the non-nationals and the CAT DDOs, that was the first question. So CAT DDOs are budget support. This means that the money is disbursed in the budget, and then the government decides how to spend. Right? This is very important. When we talk about different modalities with in the rapid response option, there we will be looking at eligible expenditures, which is a pre-identified list of government spending that the government spends and we reimburse. ESF does not apply to budget support, which is something in our policies. ESF applies to IPFs. So in the second category, we will be looking to making sure that the ESF is there and it's applied correctly. So I hope this clarifies the question there. On so I think there is a bigger underlying question, whether it's on Morocco or on the separation on security and realities on the ground. The broader question here is around the definition of crisis. And what do we define as crisis in different instruments is a little bit different, and it's different on purpose because they serve different purposes. For example, with cat DDOs, this is about natural catastrophes, and it's about health emergencies, right? So hurricanes or the COVID pandemic would fit into that part. With the IPFs, this is the investment financing, the definition is very broad. The definition is man or non-man made disaster with very deep social and economic consequences. And we have a way of defining and assessing that and basically determining the suitability of that. With IPF DDOs, or this is the IPF contingent financing, the definition is purposefully extremely narrow. It's extremely narrow because the country is very vulnerable to that particular event. Our pricing in terms of fees is the pricing that applies to our instruments. For either countries, you have one set with concessionality. For IBRD pricing, it will depend on where you are on the income spectrum. So there is nothing new or nothing different that we are putting forward here. The questions, both questions on definitions and how do we handle that, really underlies to me the need for a very thorough understanding of what the options are, and it's an understanding from our side to transfer this knowledge to the authorities so they know what they can use in what point. And then, once a disaster hits, actually repurposing up to 10% of funding, and a lot of commentators and my fellow panelists noted that there is not much available financing. The financing is actually going down. Well, that's one of the issues we are trying to address through the toolkit by lifting up the limits on for example, cat DDOs. We are allowing for larger share of financing to go to crisis response if when a disaster hits. So that's for example one way of doing that. By repurposing up to 10% of the portfolio, we are channeling within days resources so that we can have the resources available when a disaster hits. And then apart from the toolkit, we do have other instruments in the toolbox that are there. They're the more traditional instruments of recovery operations, emergency operations that can come in the rebuilding, in the recovery phase. But in these first days is what this toolkit really wanted to come in and to step up our effort to deliver financing. We also have IDA, which is extremely relevant for fragile. Well, this is the only way we are supporting fragile and conflict affected countries. It's a year of IDA replenishment. So this is really extremely important. IDA has shown an incredible impact, incredible leveraging machine, and also incredible impact. So connecting here, another point that our panelists made, impact before financing and instruments. So our ambition is to raise the biggest IDA ever, which means the largest pot of financing available to the poorest countries, and to direct this financing to where the needs are.
Thanks, Lena. So I noticed we've only got a minute left or so maybe we can go around the other. So the other four panelists, if either you want to pick up on one of those questions, or if you want to in no more than 20 seconds, or if you'd like to share with the room, what would you like to see over the next 5 years on crisis risk financing? What do you think the next 5 years needs to look like? We'll start off with Fardosa.
Thank you again. And I think what I would like to see is the processes of receiving this crisis finance. I think shorter processes. I don't think it should go through the same IDA processes that it does go through at the moment.
Great. So RRA may be helping with that, yeah. Ekaswehi.
So two things. I think, greater focus in terms of the development of these technical solutions to really match the needs of countries, given what was raised earlier in terms of a bit of a mismatch there. And then I also think part of it is slightly political, which is the political courage, right? If we believe that these numbers are not acceptable, there is a little bit of courage that I think that the development community, donors, etc., might need to have to exercise. Again, if we believe that the situation is untenable.
Great. Christina.
Great, thank you. I guess, yeah, I'll answer the last question about what we want to see in the next 5 years. I think for me, it's scale. It's scale of funds. It is scale of instruments, even though I said impact before instruments, but I think scaling the instruments, we have to also scale the understanding and the knowledge and the science behind these instruments so that we understand what they're for. And scaling of partnerships. I think we've all made the point on this panel that working together is the only way we're going to solve or we're going to address any of the solutions driven by these crises, and particularly in fragile situations. Thanks.
Okay, thanks. And Leslie, if you're still around? Maybe Leslie dropped off. In which case, Galina. Do you want to pick? Yeah.
I would say all of the above. This really is a wonderful way to summarize this. Shorter processes, greater focus, at the same time scale, efficiency, as well as the incredible value of partnerships. This is really a wonderful way to kick this off. And I hope we will not see each other only in settings like that on the screen and at forums like that, but actually on the ground where we make a difference.
Great. So speed, courage, scale, and partnerships. You heard it here. Thanks everybody for joining. Thanks so much to the wonderful panelists, and thanks to the World Bank and Federal Shield again for organizing.
Thank you, everyone.